Welcome to The Explainer. Today, we're diving into a really powerful concept from EliteWave Consulting called asymmetric investing. It's an idea that pretty much flips the script on what we all think about risk and reward. So let's get right into it. Just think about that for a moment. We're always told, hey, if you want bigger rewards, you've got to take on bigger risks. But what if that wasn't the whole story? What if you could find opportunities where the potential win is just massive, but the risk, well, it's actually pretty small and contained? And this is really the core difference. On the left, you've got traditional investing. It's kind of like a seesaw, right? Risk and reward are generally balanced. But on the right, you have asymmetric investing, which is all about finding situations where that seesaw is totally broken, where the potential gain just skyrockets past any potential loss. So what does this actually mean? How does it work? Let's break down the core principle behind this entire strategy. It's really as simple and as powerful as that. You're actively looking for an imbalance, a situation where the scales are just not even. You want that upside, the potential win, to be many, many, many times bigger than whatever you might stand to lose. Significantly greater. That's the key phrase. This isn't about, doubling your money. It's about finding opportunities for truly exponential growth, all while keeping your own risk tiny and clearly defined. And to make this whole idea really click, the source material uses a perfect analogy. It's something we can all instantly understand. The $1 lottery ticket. Okay, so when you buy that $1 ticket, what's the absolute most you can lose? You know it when 100% certainty it's capped. Your risk is $1 single dollar. That's it. But then you look at the other side of that bet. Your potential reward? It's not $2, it's not 10, it's millions. The potential gain is so ridiculously huge that it's almost silly to even compare it to your tiny $1 risk. And that is the essence of asymmetry. So here's the crucial takeaway from that. You have a known, fixed, super small downside and a totally unknown, potentially explosive upside. That right there is the very heart of an asymmetric bet. Now, this all sounds fantastic in theory, right? But it immediately brings up the most important question. Where on earth do these kinds of opportunities actually exist in the real world? Okay, first, a really critical clarification from the source material. This is not some magic bullet. Asymmetric investing is not about finding a guaranteed win. The whole strategy is about making a lot of small, calculated bets, knowing full well that most of them are probably going to fail. But the few that hit, they can hit so big that they pay for all the small losses and then some. So where do you look? Well, the source points to a few hunting grounds. Think about areas like venture capital, or distressed assets, or very specific kinds of options trading. What do all these have in common? They're all areas with high uncertainty or where the market has just plain mispriced something. Venture capital is a great example. You're making a small bet on a tiny company with a huge idea. The risk? You lose your initial investment. The reward? It could be a 100x return. The key principle is the same across the board. You're looking for spots where fear or confusion has created a really skewed opportunity in your favor. As we wrap this up, it's really important to see that this is more than just a financial strategy. It's actually a fundamental shift in how you look at risk and opportunity itself. And that, ultimately, is the real takeaway here. The goal is to basically retrain your brain to stop looking for balanced 50-50 coin flips and start hunting for situations in your finances, in your career, maybe even in life, where the odds are just structurally stacked in your favor, where your downside is known and small, but your upside is, well, almost unlimited. And that's the question I want to leave you with. This isn't just about stocks and bonds. I want you to look at your own world, your job, your personal projects, the skills you're building, and ask yourself, where is my $1 bet with a potential $1 million payoff?